Hello and good afternoon, it's Adil Fazal here, market analyst at cfds.com. Be sure to visit the website www.cfds.com for your trading needs. They are the leading specialists in spread betting and CFD brokerage. Also, alternatively, visit the educational site www.cfds.education and be sure to learn more about the products and services on offer. Okay, in terms of the market, this is a European market wrap-up video. Let's see exactly what happened today, and let's try and decipher the actual version of events. Okay, so understanding. Okay, so with regards to European markets, they certainly were overall weak, given the fact that the Nikkei closed lower. So that was the overwhelming bearish bias. Now, in terms of the economic data and news flow and sentiment, momentum, etc. Going into the European markets this morning, regardless of how the Asian markets reacted, we had the negative comments from the Frenchman, finance minister, I think his name was Mr. Sapin, if I can remember correctly, basically stating that the level of monetary policy at present is appropriate and therefore not justifying any further QE and basically negating Mr. Draghi's comments, etc., etc. And that obviously is interesting, given the fact that he's saying that prior to the actual Fed meeting. Okay, that's obviously underway, and the actual minutes that are going to be released tomorrow, so that's going to be interesting. Okay, we also have the RBNZ interest rate decision tomorrow as well, so that should be very interesting in terms of two central banks and their view on things in terms of the currency war that's obviously ongoing at present, with the likes of China obviously cutting rates and obviously devaluing their currency, the ECB talking down their currency and opening up the potential for more QE in December. So the currency war certainly is in full swing. So how will the Fed react? I mean, it's just common sense. I mean, logic would state that the Fed will not even attempt at raising rates this year and will push it back next year. So because in essence they've already raised rates because China has obviously cut, ECB has took down its currency, and therefore the dollar has obviously been sent higher. Okay. So that's the scenario and situation there. Now, in terms of the monetary private loans and money supply data, that certainly was construed or interpreted as being negative because of the actual money unable to go to where it needs to be in order to stimulate and obviously get the growth side of the equation triggered, and obviously that would then create inflation, etc., etc. So the channel of liquidity is certainly not efficient enough. Okay, and when that shows signs of lack of efficiency, then that is interpreted as being negative and is a risk-off environment or risk-off scenario. And that's exactly what actually occurred. You had anti-QE statement plus the money supply being construed or potentially perceived as being negative in terms of being effective, etc., etc., and that obviously caused the European markets to come under some pressure. Then we had GDP data out of the UK that actually came in weaker than expected in terms of the index of services as well. That certainly was not good. In terms of US data, we've had a negative momentum from US markets as well when they came online. And we had Redbook, durable goods, we had market PMI, and also consumer confidence all coming out in the negative. So that didn't help matters either. Okay. Now the euro certainly has found support, given the fact that you have a weaker dollar side of the equation, and that obviously means that the euro will obviously attempt to push higher, given the fact that you have Miss Yellen obviously on the verge of pushing interest rates back into 2016, and this attempt at raising the actual interest rates in December, that certainly is not in the equation any longer. Okay, so that's certainly perceived as being negative for risk. Okay, so given the fact that the euro is starting to appreciate, etc., etc. Okay, that's a situation and scenario that we find ourselves in at present. So overall, you had the Shanghai down 1% in the morning, and that reversed towards the late sessions. That certainly is a good sign, given the fact that the Chinese rate cut has failed to really propel the markets higher at all. Okay, so if you look at the chart, the Euro USD at present, you can see that we are attempting to build a base, although it has failed to push through on the upside, because I did have a long at one time, and I did actually bail out that long. because price pattern and time was not confirming. But you are certainly in this situation where you have you putting a put double bottom at the 1.1 level on the Euro USD, and there is potential of moving higher given the fact that you have weaker data today, and obviously a risk-off scenario will send the euro higher. So that certainly is something that we need to take into the equation as well. Okay, in terms of the market itself. Okay, now Euro GBP certainly is failing to move higher, even with a weaker economic data out of the UK. That certainly is a cause for concern. And Euro JPY continues its descent, and given the fact that the yen itself, the situation with regards to the yen has certainly been strong, and obviously the risk-off environment. So that certainly is one aspect to certainly take into consideration, as opposed to the lack of movement on the Euro USD on the upside. Okay, the Aussie has certainly sold off quite substantially, but is finding a base now on the Aussie USD. Also the Kiwi dollar as well, we are finding a base as well after this sell-off. We did have the spike higher after weak economic data, but the dollar side of the equation, in terms of anything against the dollar, will certainly hold and certainly be bullish from my perspective, given the fact that you've had weaker dollar, and plus Yellen is not going to be raising rates this year. So the dollar certainly is expected to remain, and it is expected to be weak. Okay, now oil itself has certainly been under pressure today as well. If I bring up a chart of oil, mainly due to the weak economic data. Now we are stabilizing on the 10-minute chart here, so certainly a potential base being built. Copper itself has been weak, but we are making this base as well, especially after the weak economic data that we've seen. But the dollar side, dollar certainly falling will help commodities to a large extent, so that should be interesting to observe and see what the reaction there will be. Okay, now in terms of Europe itself, nothing really in terms of market moving news for European markets other than the anti-QE comments. Now, to a large extent, that certainly seems to be priced in. Now, let's have a look at the German DAX. I did explain that there is a potential for a H&S formation on a German DAX, and that failed to actually materialize today. The daily chart, you can see certainly a bearish candle towards the end of the day. 60-minute chart, we held that resistance zone which I explained yesterday at 10,850, and we have pushed lower ever since. Now we did have this H&S formation. We did actually negate that neckline. I did explain this chart to you yesterday. So you had this left shoulder here, you had the head here, and obviously you're looking for a right shoulder and thrust. We did actually move lower, which was fine. That certainly was expected. As you can see, 10,660 was a target. But as soon as we pushed higher, closed the gap and then sold off. Perfect technical sell off ideally, because that's one of the reasons why I was short, and the markets have obviously fallen ever since. Now you are looking at potential support at this 200 MA at 10,670. In terms of the German DAX finding support elsewhere, you do have support here at 10,690 as well. So that's certainly a zone that we're going to observe and remain keen on. Okay, in terms of technical analysis, if you connect the pivot highs together, you can see how the market certainly has been obedient to this diagonal trend line. We obviously have broken that pivot low that we put in the morning, and the market has traded further down. Now the Nasdaq certainly is holding support, given the fact that we have Apple earnings. In terms of earnings news, we did have weak earnings in the morning from BASF, and that certainly obviously dented sentiment. And now we've had weaker earnings from Ford, Comcast and DuPont. That certainly again has dented sentiment. Obviously weaker UK data, we already know. Now the bullish side of the equation, we had BP, better earnings from BP, and that certainly has helped the FTSE to a large extent until the weak economic data came out from the FTSE, and that certainly shifted the bias there. The Shanghai rebound obviously was a bullish scenario, and US earnings strong. Candidates were Merck, Pfizer and Alibaba. Okay. Now that I've summed up the fundamentals to a large extent, again we go back to the technical. So the DAX itself has seen the large, basically the majority of the sell-off, I would say, and we are looking at potential support around this 10,670 zone on the German DAX. Now let's cross-reference that with other indices as well. So let's bring up the chart of the CAC, okay, itself. Let's go to a daily chart of the CAC. The daily chart of the CAC still, I mean, as we already aware, there is an inverted head and shoulders formation, so we're certainly taking that into consideration. But I do need to remain open to a potential gap fill below. So you do have this gap fill on the German and the French CAC at the level of 4,800. So again, that certainly needs to be, we need to be open-minded with regards to that potential gap fill. The 60-minute chart on the French CAC, again, it's all about that gap. No real support to a large extent, especially given the fact that we failed to hold that bottoming tail. So it certainly remains weak on the French CAC. On the 10-minute chart, as you can see, lower lows and lower highs. And again, the whole game is about this gap fill at 4800. Now, again, it's all about Apple. Now, I did have a short on the DAX at 4635. It was almost plus 14 points in my favour. I amended to break even and I did get stopped out break even. So currently flat on indices. The only trade I really have is the Aussie long at present with regards to the live analysis service. Currently up 180 odd points I think this week. So a good week so far given the fact it's only Tuesday. And we'll see how the rest of the week trades. But for now, it's certainly the French CAC itself does look vulnerable. But again, it's the QE trade. So given the fact that you have Mr. Draghi, certainly obviously with his QE drum, one needs to remain cautious with regards to any short positions because this market could certainly switch very, very quickly. Okay, so we have got this downward sloping wedge pattern, and certainly given the fact that you have Apple earnings stronger than expected, then don't be surprised if this certainly pushes higher and potentially moves to new highs even. Okay, especially given the fact that you've got the QE put in the background. Again, if Apple disappoints, then you are looking at gap fill below at 4800. So you can see how important Apple is with regards to the global growth story, whether or not they've actually been selling more iPhones than expected, and their guidance going forward will be very, very crucial. Okay, Euro stocks. Let's bring up the chart of Euro stocks at present. Here we go. So daily chart of Euro stocks. So you can see here we've pushed lower, reversed. Again, you have that unfilled gap here at 3350. So that certainly remains a magnet. The 60-minute chart, obviously you flushed. The unfilled gap below will be key. Until then, no real support at this perspective. Having said that, you need to be open to two ways, both ways. Okay, so you are looking at a fib 38% support zone around the 3670 level. So again, certainly remain open to that, and realize that you have got the QE trade in the background. So people that want to buy the dip based on the expectation that Draghi will be obviously enacting QE in December, then they'll be licking their lips at this potential pullback. Okay, so certainly remain open to that as well, because QE certainly is dictating every move in this market at present, and the Euro USD has certainly struggled to push higher. I did attempt to go long on the Euro USD, and I actually pulled out that trade very quickly, given the fact that the lack of movement higher. Every time it attempted to go higher, there was met with fierce selling as well. So again, certainly remain open to that. Again, it's all about the Euro USD. So be very careful with regards to any short positions. If you do see short positions, be very quick to amend them to break even or to take profit from my perspective as soon as you can see any weakness in the euro. Okay, now FTSE 100 itself, let's bring up the chart. The FTSE, initially we had BP certainly helped FTSE push higher, but we certainly seem to be making a potential double top here at 6450. Even with BP, we failed to rally, so that certainly is a slight concern. We have this key diagonal trendline support in play. Let's see whether or not we can hold. Again, it's all about Apple. If Apple fails overnight and is weak, then don't be surprised to see the FTSE down to 6300. Okay, the 10-minute chart on the FTSE 100 itself, lower lows, lower highs. We did actually hold this key previous support equals resistance at 6390. We pushed higher and attempted to hold the previous support equals resistance at 6405. Consolidated. I was expecting a potential breakout here, given the fact that we broke out this bearish channel, and I expected a thrust higher or a short squeeze higher, and that did not occur, unfortunately. That just did not occur. Okay, so again, we'll keep an eye out for that. If you take the pivot lows together, we do have potential support in this zone on the FTSE itself, and we are in this bearish channel. Whether or not we can sustain or break out this bearish channel will be absolutely crucial. But remember, 6405 is your key resistance zone. The next zone will be 6450, so that should be very interesting to observe. Okay, so certainly keep an eye out there. 60-minute chart as well, again diagonal trend line, that's going to be absolutely crucial and key. Given the fact that we've looked at European markets now and the close and the potential setups going into tomorrow, the S&P 500 is your resistance zone at 2080 remains. I've explained this now over a few days, last 2 or 3 days I've explained that at 2080 level is absolutely crucial, especially over the weekend, Monday, Tuesday. Okay, and I'm repeating that again. Your flush on the Nasdaq, if Apple fails, okay, then don't be surprised to see that the gap close at 2050. Now, I'll certainly show you that chart on a 60-minute basis. I did explain to you yesterday that this is a failed bull flag. A failed pattern equals an emotive move in the opposite direction, and that's exactly what we're observing thus far. I did explain to you that there's a bear flag, a bear flag that was in play, and that's exactly what's transpired. And I explained the reason why we would sell off, and that was mainly due to the fact that Shanghai has failed to follow through on its rate cut post Friday. Okay, and that's exactly what's occurred. Okay, now the 10-minute chart on the S&P 500. Ever since we closed the gap initially at the 2070 region, we've certainly certainly remained weak. We have this key diagonal trend line. That's exactly what's holding right now. So certainly put that on your charts and observe that, because this is the next direction. Now we've had the the potential HNS formation, or you call it a symmetrical wedge breakdown, and that's exactly what's occurring right now, and that's why we're seeing weakness. Now, in terms of intraday support itself, you know that there's the 2050 gap. That gap will only close if Apple fails. Okay, if Apple fails to keep the bears happy, or should we say the bulls happy, and then you will see an en masse sell-off in the market. And again, Apple is your key barometer in terms of guidance, strength, and earnings going forward, given the fact that the number of companies that depend upon it. Okay, so absolutely crucial. I should bring up a chart of the Nasdaq at this very juncture, but I think I'll leave that for now. The S&P should be sufficient enough. Okay. Again, it's all about gap fill below at 2052, or if we break out this bearish channel, then you are looking back at the gap level above, which is 2071. If that breaks out, then the next level you're looking at is going to be 2073, and then you are looking at 2080 again. It's a tricky one. Again, earnings either way. You just have to be ready. If the market pushes high, you have to respect that. If the market goes low, you respect that too. No inherent bias. Like I said, I was short the Nasdaq. I had a stop loss at 46.35 after I was plus 10, plus 15 in the profit, and the market has moved back higher and stopped me out, break even. Okay, so I just have to respect the strength. That's all you have to do as traders. Okay, so the S&P 500, these are all the potential formations. So again, keep an eye out for those going into today's Apple report, because Apple really will shift the market either side. My gut instinct tells me that we are going to close the gap below at 2052. I'll be honest. Okay, that's my gut instinct so far. That's why I was short the Nasdaq, and I was expecting it to keep hold of my break-even trade, and obviously be plus 40, plus 50 as I go off to play badminton now, my friends. So that's not the case, unfortunately. So we just have to carry on and plodding. Now, intermarket analysis is telling me that Euro USD is into support, although we have failed to move higher. So therefore, I just have to respect that for now. And you can clearly see that when the euro moves higher, that means it's a risk-off concept, i.e. people want to go into the safe haven of the euro, and the QE trade is reversed, and European equities are sold off, and obviously everything else sells off as well. That hasn't occurred thus far either. So it's all about price, pattern, and time. Price and is not certainly confirming. Pattern is there. Time is taking too long. So it's a tricky one. I mean, from a technical formation, yes, the Nasdaq certainly wants to go lower, and the S&P wants to go lower, and European market wants to go lower, but time certainly has taken too long to do that, and price action at this current juncture certainly isn't folding. Okay, so you just have to respect that as well. Whether it folds after hours when the economic data is out, i.e. Apple earnings are out, then we'll see, but it's too late then as traders. We can only react to the actual data itself. Intermarket analysis does give you the ability to foresee the events, and my gut instinct at this very moment in time is that we are going to close that gap at 2050, given the fact that we've had weak economic data out of the US, weaker durable goods, weaker consumer confidence, weaker PMI. Okay, so gut instinct states we are going lower, but we shall see, especially given the stellar move that we've seen higher as of late. A lot of the bullish news has already been factored in from my perspective. And especially given the fact that we put in a new low on the price of oil at 42.3, we are bouncing now back up to 43. But either way, that certainly is a warning sign. Okay, folks, especially given the fact that we've had the lack of follow through from China post the Chinese rate cut. Again, that's another negative factor as well. Why did the Chinese cut rates on a Friday? Is a warning sign for Apple earnings from my perspective, but my price action isn't conforming to that due to the stimulatory nature of central banks at present. Okay, that prevents the sell-off from occurring. Either way, we shall soon find out in the next 2 to 3 hours. Just trade safe, stay safe, and this is a market wrap. Be sure to visit cfds.com, the obviously specialist in CFD brokerage, and be sure to visit the educational website too. Goodbye.